What's going on, traders? Welcome back to another trade breakdown video. In this one, I'm going to break down two of my trades, one on the YM and the second one on the RTY. So starting with the daily chart here on Wednesday, we have SMT divergence at the internal range liquidity, the fair value gap at the daily chart, and we are expanding away from the protected swing, which the Friday's candle created, candle to closure, and in a bullish order flow. So we can expect the week to be expanding upwards, although we don't have the weekly wick. So that was my idea. But for now, we have failure swings, equal highs on the RTY, and the previous day high can be my target, the easiest round liquidity. So keeping that in mind, I will mark the SMT divergence at the internal range liquidity. SMT divergence, the RTY is taking the previous day low while the YM is stronger. So now I will drop down to the 4-hour chart. Now here on the 4-hour chart, you can see strength in the YM, although the RTY is weaker. And if you have noticed, we have failure swings, low resistance liquidity run above us. So when we are trading from a protected swing, SMT divergence, we can target the failure swings. And one thing more, we have a small wick up the 6 a.m. candle, marking the 6 a.m. open. We have created a small wick and now we are expanding. So I would trade post at M, which is the New York kill zone. So now I will drop down to the 1-hour chart. Now here on the 1-hour chart, as you can see, we have closed above the down close candles. That is another confluence that the or bias is bullish, and these can be my targets, this high and this high. Now all we need is a swing point with SMT divergence, and then we can trade the 5-minute market maker buy model. So now waiting for the swing point formation on the 1-hour chart, skipping to the 8 a.m. Now with this candle at the 8 a.m., we don't have SMT divergence with the RTY, but I can pull up the NQ chart, which is also a correlated asset to the YM, the US 30. So now pulling up the NQ chart. Here you can see that the YM was stronger asset of them all. The ES was weaker, the RTY and the NQ was also weaker. So I can use the SMT divergence. We have taken the 7 a.m. low on the NQ and we are creating SMT divergence. So marking out the SMT divergence right here. Now I have the swing point and SMT divergence at the swing point. The next thing I can do is drop down to the 5-minute chart and trade that market maker buy model. Now here on the 5-minute chart, both on the assets, you can see on the NQ, we have taken the previous candles low. And all we need is a closure above the down close candle that created that SMT divergence are taken this low. So I'm trading the YM single down close candle. We have already closed above that. Now I can assume this the SMT low will be a protected low. I can enter on the next candle. My stop loss below the SMT low and I can target 2.5R, and the price started expanding in our direction, completing our 2.5R objective. Now for the RTY trade, which was on Thursday today. So on the YM, we have taken the previous candle's high, a midweek reversal profile. We are expanding away from the weekly opening with a no wick, so we can expect a return towards the weekly open to print that wick. And we do not have any protected swing at the weekly low, so we can expect a midweek reversal or a Thursday counter profile. So in this case, we had a midweek reversal, a candle to closure inside the range. So I can assume the Thursday candle will be an open high, low close candle or a bearish expansion candle. And as you can see, the RTY is weaker this week and it has returned to the weekly open. We have SMT divergence at this high right here with the RTY. So that was our candle 2, and we can expect the Thursday to be a bearish expansion. Keeping that idea in mind, I dropped into the 4-hour chart. So here on the 4-hour chart, you can see we have a bearish confluences. One, we have a closure below the up close candle, a shift in the order flow, a change instead of delivery both on the YM and on the RTY. But in this case, the RTY was weaker, so I'm shorting this. Now marking the 6 a.m. opening, we have SMT divergence at the 6 a.m. high. So from the daily opening, we manipulated to the upside to create the wick up the daily candle, and now we are returning back into the daily low, the current day low. So I targeted the current day low, and we have SMT divergence at this high right here. The YM is creating that failure swing, that lower low. So that was our confluence for the 6 a.m. candle to be an open high, low close, or a bearish expansion candle. So now we have all the confluences. I would drop down to the 1-hour chart to trade the market maker sell model. Now on the 1 hour chart, as you can see, we are expanding away from the 6 a.m. opening, small wick, and then we are expanding to the downside. A closure below the up close candles at the SMT divergence, which is another confluence that the intraday high is now printed. And now we are going to expand to the downside to the daily low. Now we don't have SMT divergence at the hourly swing point because we are taking this high on the YM and also on the RTY, and on the other indices like NQ, we are also taking the current high. So what I did was I treated this candle as a reversal candle, and this was my candle third, and I traded within the candle fourth. And another thing you can do, as which I will be going over in my next videos, you have to use the 2 hour chart, which is the mid range between the 4 hour and the 1 hour chart when you are not finding setups. So here on the 2 hour chart, you can see we had a reversal candle. The third candle was an expansion candle. So I can trade the third candle, and the time frame alignment for a 2 hour is the 10 minute, and maybe I will make a video about this. So dropping down to the 10-minute chart. Now here on the 10-minute chart, we have a reversal candle, SMT divergence at that candle, a change instead of delivery within that candle. Now we can trade the third candle. So with the third candle opening, which is the 8 a.m. to 10 a.m. candle, if you are confused with the 2 hour chart, you can stick to the 1 hour and 5 minute. This entry was also available on that time frame, but it was cleaner on the 2 hour. Now within the next candle, we have created the wick. How do we know? We have created a large wick, taking this high, short-term high, then closed below the up close candles right here. Actually, we have closed through now, but I entered this candle because I can see it from the manipulation that the wick of this candle is printed. So what I did was I entered this candle, my stop loss below this high, and I targeted the current day low, which was about 5 hour, and we have expanded to downside, completing our 5 hour objective. And this was the biggest trade I've ever had in a few months. So now this trade is a loser, which I took on the crude oil. So starting with the daily chart, we are expanding away from the weekly opening, but we haven't met any drawn liquidity. So my bias is bullish to these highs, and this high on the RB. Fine, I will drop down to the 4 hour chart. Now on the 4 hour chart, you can see we are clearly in a bullish trend, down close candle followed by closure above. And in this case, we have SMT divergence at the daily low. The CL is taking the daily low, the current day low on the Wednesday, and RB is creating that higher high and SMT divergence. So that was our other confluence. So now the 2M candle was a reversal candle. So I would assume the 6M to be an open low high close or a bullish expansion candle. So keeping that in mind, I would drop down to the 1 hour chart. Now here on the 1 hour chart, you can see from the daily opening, we have created the low of the day, closed above the down close candle. Another confluence, London reversal and New York continuation in terms of the daily profiles. So now we can assume the New York to be an expansion. For that, we can align the 1 hour swing point, 5 market maker model. In this case, we don't have any SMT divergence, but from the wick side, I can see the RB is creating a smaller wick and the crude oil is creating that larger wick. I long CL because the Forex platform doesn't have the gasoline. So from here, I would drop down to the 5 minute chart. Now here on the 5 minute chart, you can see we have SMT divergence at this low. The CL is taking this short-term low and the RB is creating that higher high. Now we need a closure above the down close candle, which creates that SMT divergence. So this is our change in state of delivery. I enter at the next candle somewhere right here, and my stop loss below the body lows, and I targeted 2 hour. Now at this point, due to the spread on the Forex platforms, I was out of the trade. My stop loss was below the body lows, but there wasn't any room for the spread, so I was out of the trade, and the trade went in our favor. Well setup. Hope you have learned something from this video. Let me know if you want a time frame alignment in the top-down analysis video in the comment section. Especially, I will be going over the 2 hour to 10 minute, which is the mid-range between the 4 hour and 1 hour. You won't get stopped out too often. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you in the next one.